Hello, everybody. Welcome to Bitcoin Not Crypto. You can find me on Twitter X at Forest Total. And today we have guest on Soleil from the True North podcast, as well as his own live streams on his YouTube channel. He talks about covered calls on MicroStrategy and has some great insights. So we're going to get into all of that. First, though, Soleil, I wanted to hear about what got you interested in Bitcoin to begin with.
Appreciate you having me on the show. I found your channel and I'm like, okay, before I come on here, I'm like, all right, I gotta really binge. And I sorted by most popular videos, and I'm like, holy crap, the guy was living in a mobile a mobile home. Do you still have that?
I do, yeah. So I'm going to be selling it and porting that into Bitcoin or MicroStrategy, but I still have that. I bought that in 2019, actually. My wife and I lived in it, traveled all over, cut expenses, and I was able to film and make my documentary business out of there. Yeah.
Yeah, that was pretty sweet. I thought that was pretty cool. You never know what you're gonna find, when you sort by latest, and then you sort by oldest, and you're like, wait a minute, holy crap, this is all the cool stuff that they were doing back in the day. So, yeah. So for me, I quit Facebook a few years ago, but I got in there and I was like, okay, it was cool to reunite with like high school people and whatnot. But I started talking with reuniting with a guy from high school, and I guess you could say he was the original paranoid crypto anarchist. And I'm watching all of these like political fights, going back and forth, conservative, liberal, uh, you know, uh, ANCAPs and ANCOMs and all this stuff. And I was pretty libertarian my whole life. Like the first time I voted, I was like, I was pretty square. I'm like, "Okay, let me just literally go to the Republican, website and check out what their planks are," and then I went to the Democrats and I'm like, "Let me check their planks," and I was like, "Well, half of this stuff is, like, no go for me," so I couldn't vote for a Democrat, I couldn't vote for a Republican. I went to the Libertarian site and I was like, "Holy crap, they're right about everything," like, and, so I voted Libertarian a little bit, and then I kinda even got a little bit disillusioned with that because it was like they just had no chance. So I was like, I just kinda got out of the whole damn thing. So I haven't voted for quite a while, but, so I'm listening to these guys argue back and forth, and the anarchists were just like I had no arguments, like, that they were wrong about anything, so I was like, "Ah, crap, I guess I am." You know, it was I was dragging my feet real hard about it, so I had to kinda laugh when Sailor made that, paranoid crypto anarchist comment. I think he was talking to Saifedean or something, one of those guys, and, so yeah, so that's kinda how I got my start, and one of those guys started talking about Bitcoin, and this must have been 2017 or something, and of course, I went through the trader phase and just, scam coins, and I'm gonna trade into it, I'm gonna trade out of it, and I'd probably if I didn't go through that phase, I'd probably have, like, I probably lost 75% of my stack just trading in and out of crap. Um, so this is the first full cycle when I've been, like, fully orange pilled through a bear and a bull, you know what I mean? A solid 5 years, and this guy's just, like, super smart, worked for all the tech companies, and I'm like I kind of did a little bit of, trust not verify to a certain amount because the guy was just so smart, so I kind of, like, trusted him to be on kind of the right track. And then all of the research that I did behind that, of course, with my libertarian beliefs, I was like, "Oh my god, yes, I need freedom money to be real," And, that was kinda how I got my start, and so I kinda owe him, that he basically orange pilled me, I guess you'd say. And started even trying to help him out a little bit with a Bitcoin basics group that he formed on Facebook, and so I kinda moderated that for a little bit, and, I mean, I've had cold cards that people probably never heard of. I had one called a Keep Key back in the day, and it was, like, the cheapest one in the market, you know what I mean? And it was not great, and so I've gone through that whole scenario too, like, I had that thing, then I had a ledger, and then I'm like, "Oh, shit, they're not open source," and I'm like, "Okay, now I'm gonna get a Trezor," and, finally ended up with I got, even a new one that I have to get set up, but, uh, I realize I'm kinda all over the place with that, but that was my Bitcoin journey, and, another one of those guys that I hooked up with, on Facebook, we were kinda working on some financial things, and he's like, "Hey, look, I've been researching stock options, and basically everyone that I work with is needs to learn them and work on them." He was kind of like a tax shelter, kind of financial wealth building kind of person. And so I'm like, okay, I guess that's what I need to do. I need to go and learn how to do this. He had an investment club on Clubhouse. I'm not sure if you're familiar with that app, but um, so I tried to like follow along in that trading group, but of course I had a real job, right? So I could kind of only poke my head in there. So what I ended up started doing was I just while I'm walking the dogs, I'm just listening to options trading videos on 2x speed and just like, I don't know, probably 2 or 3 hours a day of it, well, at 2x speed, so probably 1 and 1.5 hours a day, but I'm getting like 3 hours of videos down, right? And so I guess I owe my dogs all of my options training. But, I found this guy In The Money, his YouTube channel, and then I found Tasty Trade, and they were trading much different than these guys in the trading group that I was with. A lot of them were momentum traders, day trading, and they could just stare at the screen all day, which I couldn't do, and selling covered calls just seemed like kinda just seemed like easy mode, like it was something that I could just do. I can just poke in when the market opens, maybe place a couple trades, and then go join a meeting and, do my real work. And so that really fit into my schedule. And so that's yeah, I guess that's my whole Bitcoin journey, my options journey. And then the way that I found MicroStrategy is I was just kind of completely agnostic about stocks. So I've traded just the junkiest stocks that you can imagine. Like I forget which car rental company, it might have been Hertz or something. Back before GameStop, I think it was like this place was like rumored to be going out of business, like bankruptcy talks. Well, of course, that's going to shoot the vol up. And so I'm like, oh, I can get these juicy premiums on this on this Hertz or something. And I made like $20 on that trade and then realized that they were in bankruptcy talks. And I was like, oh, okay, this was dumb. I'm gonna lose all my money on this thing. So but back in the day, I was just completely agnostic about the ticker, and I only cared if I could collect large premiums. And that actually seems to work out fairly well if you can just be unemotional about it, make a couple dollars and then get out before things go to hell. Um, but a lot of times the premiums in those stocks are high for a reason because there is a lot of danger, and maybe they do have bankruptcy talks, or maybe their their business model is suspect, or kind of like Tesla at the beginning. You don't know if it's going to succeed or fail, and the premiums are justified because you could just as likely lose all your money as make a bunch of money. So um, I did that for about 4 years, from about May of 2020 to 2024, or yeah, and made a bunch of money, lost a bunch of money. And when I saw MicroStrategy, I was like, "Oh, the premiums are amazing." So I'm just gonna run the wheel, which is basically selling cash secured puts until you're assigned. Then you turn around and sell covered calls until you're assigned again, and those shares are called away, and you just rinse and repeat that cycle. And right when I saw Quant Bros 1, I was like, "Oh, wait a minute. There's something to this that might make me want to rethink this trade a little bit." Because as an option seller, and especially if you listen to Tom Sosnoff, who's kind of like the tasty trade guru, he's completely agnostic about price. And if you're talking to him and you tell him that you're bullish on something or you're bearish on something, he'll just take the opposite trade. Just because he knows most people are kind of just wrong all the time, you know? And so that was uh that was like the first time besides Tesla that I got really kind of emotionally attached to a stock and really believed in it. Before that, I just didn't care. If the premiums were great, I'm trading it. If the premiums dried up, I exit the trade and I go find something else. But that took a lot of time. So that's like scouring, looking for something that's, probably has to be close to at least $10 or more per share. Otherwise, it's hard to squeeze any premiums out of it. And I'm just looking at it's taking me hours a day basically to find these tickers. Um, and once I saw MicroStrategy, I was like, holy crap, this is the best premiums I've ever seen. And I just started trading it a lot. But it was really Quant Bros one when I really realized, holy crap, this is like, it's wrapped in Bitcoin, number one. And as long as they don't do anything stupid, it can just kind of ride Bitcoin's coattails up. And I think that's where I've kind of landed. The beginning and end of my MicroStrategy thesis is, well, three things. One, Michael Saylor said that you purchase an asset when it's number one disrupting, and number two the clear winner. And the examples that he gives are like Apple when the iPhone was putting Nokia and BlackBerry out of business. Like at that point, you're just all in on Apple, and that'll make you a bunch of money. The other example he gave was like when Netflix puts Blockbuster out of business. It's just up from there, things like that. So that's what I see in MicroStrategy. They're disrupting the entire financial industry, and they're the clear winner. There will be second place, third place, fourth place, fifth place, and those might all make money as well. But they're just way out in front. And the only other thing that I think about that is, being orange pilled, and then I think about what could a company do with the most of the best asset ever in human history. Like, it would take a major, major fumble to screw that up. Um, and we can talk a little bit about why I'm kind of bullish on their BI software, even though I know nothing about it. But just the fact that they own that much Bitcoin makes me think that they'll be able to figure something out.
If you're interested in getting yourself some Bitcoin, I would recommend taking a look at Bitcoin Well. There's a link in the description, and if you use my referral code, you'll actually get some free Bitcoin. They're the best place, in my opinion, to buy Bitcoin because they're a non-custodial exchange, which means they never hold your Bitcoin for you. When you send them money, they'll send you Bitcoin directly to your wallet, and you can buy on-chain or Lightning through them. And they have a swap function at a 0% fee, so you can swap in between the two. They also have non-KYC options, and they're available in Canada and the United States. So check them out. Link in the description. That goes to support this show. Thanks, everybody. True, yeah. So you already had the Bitcoin understanding and you were buying MicroStrategy just because of the vol. Did you understand even what MicroStrategy had Bitcoin before listening to Quant Bros?
Yeah, yeah, I knew that they owned it, and I knew that that was but I just assumed they were a Bitcoin proxy. I thought, okay, if I want leverage, and instead of owning the mining companies, so I traded a ton of miners as well because their vol was approximately the same as Bitcoin. And I thought, okay, well, if I want, 1.5 or 2x vol, I'll trade MicroStrategy. And so that's kind of the only thing that I thought about it at that point was I can just collect a ton of premiums on this thing.
Gotcha. Okay. Okay. So, I wanted to, I mean, there's so much in there. We'll get into each one of these things, but I wanted to know a little bit more about, um, how did you like, because understanding Bitcoin, uh, you kind of have to understand like what money is. Was that just through your exposure to libertarians and that being a subject of that in that group, or was that through getting to understand Bitcoin through the Facebook friends? How did you understand like what kind of money was and how Bitcoin could be new global money?
I got to credit Sailor for, I guess, cleansing me of my shitcoinery. And it was probably like, again, walking the dogs, but I listened to is it 25 or like 27 hours of Sailor on Robert Breedlove's What Is Money show. I just listened to that, from start to finish, and I was like, "Oh, that's what money really is." And that's, how does it it goes money value goes from, soft money to hard money, right? And, okay, if Bitcoin is the hardest money that probably can ever be created, I mean, you could copy it and just say 10,000,000 max or 50,000,000 max or whatever. They'll still all be hard, but, um, once I realized that, it was kind of like, "Oh, yeah, this is a game changer."
Yeah, absolutely. And then, so you got into MicroStrategy, selling selling cash secured puts. This is something I want to talk to you about for my own selfish reasons. This is something I've been considering. I know how to do covered calls. I've been fairly successful with that. I also kind of started the same way as you did, just like looking for volatile companies. I sold covered calls on AMC,
Oh, yeah.
on even Nikola. I made more from the premiums than the stock was worth. Like it was crazy.
I did as well, and were you following the news with the founder getting, found guilty of fraud and all of that? I was like, "Man, I used to trade that," you know?
Yeah, yeah, same. And I knew it was like a trash company basically from the get go, but it was just like the premiums were insane.
Right, right.
And then okay, so cash secured puts. Do you still do that? Do you still sell cash secured puts?
I will, and sometimes I only do it just as demonstration purposes for the videos, and, so the way that the wheel works, if you look at the, uh, the same strike, like, distance out of the money for a cash secured put versus a covered call, the premiums are gonna be nearly identical. So it's not like you can say, "Oh, I'm a cash secured put person and I'm gonna make more than the covered call trader." Like, no, the premiums are nearly identical. The only difference would be like, if the stock's trading at 300, or 301 and or 350 cents, it's gonna be a little bit closer to the 300 strike than the 305. So if you're kind of looking at the 300 strike as the cash secured put, it's closer to at the money, so the premiums would be a little higher. But if it's literally equidistant and then the price is 300 a share, selling the 295 put or selling the 305 covered call should be nearly identical in profits. So if you're good at selling covered calls, then you're good at selling cash secured puts. You'll just do it and the profits will be the same.
Right. Okay, so the premiums and the profits will be the same from that, but is it also it's a different position, right? You're holding cash as opposed to holding the underlying equity. Is there a difference there with like exposure to the long side of an equity as opposed to cash?
Not really, but it's probably the hardest part to understand the difference, and I think it's a little bit easier to figure out what your potential profit, your call away value, versus the guaranteed premium in a covered call strategy. It's a little bit harder to figure out what your, potential profit would be because instead of it being a potential profit, it's a potential discount. So if you have a $10 stock and you sell the $12 covered call, I have $2 of call away value between the current price and the share price and the strike price. It's everything is in a mirror. Options are just backwards, right? Everything is the opposite of each other. Calls are the opposite of puts. Um, and so if you sell a 20% out of the money cash secured put, instead of getting a $2 call away value, if it goes below your strike price, you're getting a $2 discount. And the premiums for the $12 covered call and the premiums for the $8 cash secured put will probably be very similar as well. So it's kind of like everything is just opposites. It's just a little bit harder to wrap your mind around a potential discount than it is your call away value. But it's still the same thing. It's completely limited upside. Your upside is limited by your the premium you collected plus the call away value. But cash secured puts, it's like you're Yeah, it's very weird because you're calculating the discount that you may get by entering into owning the shares as opposed to the profit that you'll collect when you exit 100 shares.
Yeah, I got you. It is a weird kind of mind thing where you have to flip that around, but then it is kind of the same as well. Like it's like a mirror, it's a mirror is opposite, but it's also your reflection. So yeah, that's an interesting way to put it, and it is it's hard for me to wrap my mind around it because I've never actually done cash secured puts, but it's something I need to actually do to see it actually work. I feel like, yeah. So I want to get into a little bit about what you're doing now. So you've actually had the conviction to quit your job to sell covered calls, and or not even just to sell covered calls, but to live off of investment income. How did you come up with that kind of conviction? How were you ready to do that? And what is your strategy to replicate your income from having a job?
Yeah, it's kind of like when you see someone doing something and you're like, I can do that, or I can, or I can do that, and maybe even a little bit of ego. You're like, I can do it better than that. Um, and that's actually kind of how I got into IT in the first place. Like I used to work in a medical laboratory, and I kind of backdoored my way into working in IT. But even then, I just had a real job, right? I had a W-2 income, but we hired this guy who was a consultant, super smart, really good. And I thought, "Oh, man, if I was as good as him or as smart as him, I could be a consultant too." But then we hired some people that were just, like, sucked really bad. And I'm like, "Wait a minute, you earn twice as much as me, and I'm telling you how to do the work." And then I was like, "Wait a minute, maybe I could do this too." So that's kind of like the first thing that gave me the conviction to go out and be a consultant. And, I kind of feel the same way about this, like, I follow a few TradFi kinda like dividend investors, and they'd be like, "Hey," their version of engagement farming is a post like, "Could you retire off of $5,000,000?" And I'm like, "What?" I'm like, "I could retire off of $500,000. Like, are you stoned?" Like, of 5,000,000, like, because their idea of a return, as a Bitcoiner, I'm like, if I had 5,000,000 fiat worth of Bitcoin, have you ever used the FIRE calculator?
No, I haven't. But that's the financial freedom retirement early or something?
Yeah, and I can't remember I could find it. And if you Google FIRE Bitcoin, you probably can find it. But it's got all these basic assumptions like how much Bitcoin do you own? How much do you expect Bitcoin to go up? What are your living expenses? 50K a year, 100,000 a year, whatever. You know, yes, if all of those happen, then you can retire off of one, two, three, four, five Bitcoin, whatever Bitcoin you need. Um, and these dividend and they're not orange pilled at all. So they're like, okay, I need X amount of dollars so that I can live off of 5% of that or 10% of that. And that's like annual. And I'm looking at these covered call premiums and I'm like, no freaking way. Like I need like half a million, and I could retire like barely by the skin of my teeth. Like I can't afford for the price to go down at that point. Um uh but building in some a little bit of cushion, I was like, yeah, I could probably retire off $1,000,000, and even just getting, well, there's one TradFi guy that I really do respect. He's an option seller, and he's like, "Hey, you're being a little bit uh, optimistic talking about collecting 1% premiums a week," but he's not a Bitcoiner, so he understands vol, but he doesn't understand why Bitcoin derivatives deserve the vol that they are awarded. Like, because when he sees something with high vol, he knows eventually it won't have high vol, because that's his experience over decades, right? But now this is new. This is new money, and this vol's not going away probably in my lifetime. Like, maybe in 50 years, Bitcoin won't have the same vol it has now, but, you know, while it does, I'm gonna capitalize on it, and I'm not afraid of it. Like, after you've been through a cycle or 2, you just don't fear the volatility. You're comfortable with it. Um, so I do respect that he thinks I'm a little bit optimistic about what I think is a reasonable expectation of returns. Um, but yeah, I just kind of did the math and I was like, okay, I need X amount of dollars. And in the bear market, if it crashes by like 75% and my X goes down to 0.25x, will I still be able to get, my basic needs met earning on a reasonable amount of premium? And so that's kind of where what I calculated.
So you have a bear market strategy built in to like outlast a bear market, basically. Because I mean, a bear market will still have the volatility, so you'll still be able to get premium. But I mean, the premium is also based off the price of the underlying. So
Yeah, exactly. Like whatever the number of my portfolio is, I just assume that's the variable. That's X. And if my portfolio doubles, then the amount of premium I'll be able to collect will be a percentage of X. And if my portfolio goes down by 75%, then the premium I'm going to be able to collect is some percentage of X. And so I'm my bear market thesis right now, I need to formulate a better one, but it's basically kind of like um it's just kind of like a bull in a china shop type of thing. Like I just need my account to be so big that even if I can't prevent it from crashing 75%, it won't matter because my 25% of what I have left over is still enough to pay the bills. That's kind of like, um, but I don't know if you've heard of this guy, Chris Cole. I believe he's with Artemis, and the Quant Bros are very familiar with him, and that's who I kind of got connected to his material with. But he's got this thing called the dragon portfolio. It's a little bit of a metaphor. The dragon, I think, is kind of like the hawk and the serpent. And I don't really understand it very well, but the financial terms of like the tail and the blah blah blah. Anyway, you can read into the metaphors if you want, but he came up with a strategy that he thought would fare well in like 100 years worth of trading environment. And this is pre Bitcoin, keep in mind, but it was like 40% gold, and then like I don't know, 10% bonds. I don't remember the exact numbers, but there were five things in it. So 40% gold, 10% bonds, and then the other three were different forms of maybe equities, and some of them were long vol, and some of them were short vol strategies. Um, so I think I'm missing one. I forget what the fifth one was, but the point is, I kind of want to formulate something that's very similar to that. And I think the easiest thing to do would be to just take gold and bonds out and stick Bitcoin in. And at that point, you're left with something that's eerily similar to what Jeff Park talks about, which is kind of like a 60-40. And he's got like a long vol, short vol 60-40 thing that he talks about. And it's so far over my head that I just really need to, especially now that I don't have a job, I don't have any excuses not to just go down all these rabbit holes. But I really need to try to figure out what the hell he's talking about. Um, and I can't remember if the 60's the short and the 60's probably long and the 40's probably short. That would make more sense because the stock market does tend to go up and to the right more often than it goes down and to the right. So that would kind of make sense, like a 60% Bitcoin portfolio, and then the 40% would be assets, something like a MicroStrategy, or in my case, I'm still a big believer in Tesla. I think it meets those criteria. They're disrupting and they're the clear winner. So in 2025, I will be diversifying out of one asset, which is MSTR, and I will diversify into two assets, MSTR and Tesla. So I'll be booking some of my MSTR profits, and I'll have some ratio of MSTR to Tesla, but that's kind of undecided.
makes sense. So I've heard you talk on True North about part of your income strategy, and you compare it to like different ways somebody could create income, right? They could just sell some of their shares of the equity and use that income to pay their living expenses. But you mentioned talking about how you, instead of doing that, you put some of your shares at risk with a covered call. Could you explain that a little bit more? I thought that was like really a genius way of changing or just of thinking about the process of generating income.
It's kind of like that fire calculator or the dividend investors, right? If you have a giant enough lump sum and you're expecting them to go up a certain amount, you can just, as long as you don't sell off of enough of your assets to the point where you go broke before you die, then you're fine. Um, but with covered calls, it's like, okay, I have living expenses, I have to pay my mortgage. So if, your mortgage is 2 grand and MicroStrategy is at 400 a share, okay, I have to sell 5 shares, but you're guaranteed to not have those shares anymore. Well, the market will let you basically gamble on the outcome. There's a buyer out there who's willing to bet you that the shares will be over a certain strike, right? And if he wins that bet, then the only thing that you're forced to do is sell those shares above the price that you were willing to sell them for in the first place, at a profit, and you get to keep the premium that he paid you. Um, and some people will be like, "Well, that's 100 shares." Okay, I get it. So when you have abundance, like, um, if you have 1,000 shares or 2,000 shares and 100 get called away, that's not a big deal. But in March last year, when the price rallied, I only had 100 shares in my IRA. And since it's a cash account, so I couldn't even dip into margin. So those shares were just gone. And I have never recovered from that. So my IRA would be worth about double today if those shares had not been called away. So there is an argument to be made for just mechanically selling covered calls and thinking it's free money. It's absolutely not. The um, I tend to agree with Tom Sosnoff when he says that the market is fairly priced. So all of the options prices are fair. And some people say it's free money and it's absolutely not. Like no matter how long you play this game, your strikes will be threatened at some point and you will have to make a decision. Do I have cash to pay to roll this and prevent my shares from getting called away? Or do I just let them go? Um, and so, yeah, so if all you got's 100, and I mean, technically, even if those 100 get called away, you're going to get paid whatever that is. So if the price is, if you get called away at 400 and the price is 600, you can buy shares back. You can just only afford, 600 of them. So it's not like you can't still own shares. It's just that you capture upside. Um, but I think about it as kind of like a business. So if I went to the bank and I said, "Hey, I want to borrow $100,000 for a venture," and they said, "Okay, well, what do you think your profits might be?" And I say, "I can probably get like 1% a week off of my activities. That's 50 grand a year. And if they're going to loan me money at 10% interest, right? I can pay them the 10 grand. I can make the fifty grand. I keep 40, the bank gets 10, everybody's happy." Everybody understands that and nobody freaks out when it's, I want to start a donut shop or selling hot dogs or inventing something and, producing something or a grass cutting service, whatever the hell it is. But if I say, okay, well, I'm just going to do that and I'm going to take my portfolio and I'm going to sell covered calls against it and I'm going to generate a return, like it just their minds melt. It's like it seems like it's uh I don't know, too good to be true or magic thinking or something, but it's a real market and I think the successful traders are few and far between, but I think that's emotional mistakes more than anything. People probably can't diamond hands through, what quote unquote bad decisions and they'll just panic sell. They FOMO into something, buy at the top and then panic sell, which is literally the opposite of what someone should do in the stock market. Like buy low, sell high is the only rule, right? Like So if you freak out emotionally and do the opposite, I mean, you should expect, not to do very well. So, um, that's kind of the way that I think about it, and I even borrowed like 110 grand in 2024, and I did the calculations. I'm like, "Okay, I'm borrowing at 10%. The monthly payments, let's just say the first loan I got was for like 30 grand. Um, what were the payments? Like 895 or something." And I'm like, "Okay, if I get, even if I can only get 300 a week, that's 1,200 for the month, and I can get more than that pretty easily." You know what I mean? Um, and I did those same calculations. I'm like, "Okay, worst case scenario, um, I buy 100 shares of MicroStrategy and the price drops 50 to 75%. I've calculated that I could still make the interest payment, even making, smaller premiums off of 25% of the original value. And then if the price recovers, then everything's fine. Now, if it went down 90%, that wasn't going to cut it. But that's the same risk that anybody's taken, because if you borrow 100 grand to open up a pizza shop and nobody wants your pizza, you're still out of business. So people think it's a bigger risk, um, but it's a calculated risk. And over the past 4.5 years, other than the mistakes that I've made that I understand, like, I'm not worried about the strategy at all. And I know you wanted to talk about poor man's covered calls, and that's the exact strategy that almost liquidated me. So we can finish up whatever we're talking about now, and then we can talk about that, as well. But that's definitely a cautionary tale. We should probably go over at some point.
Yeah. Yeah, let's do that. But I do want to just one question before we get into the poor man's cover calls. There's a lot of catalysts for MicroStrategy. Uh, and I've heard, I think it was you talking about how you kind of view them all as important, but all together as important, not individually. But do you actually do you look at these catalysts and think, okay, well, I need to sell a covered call further out of the money, get less premium, or maybe I won't sell it because this could make increase the volatility too much to the upside if it proves to work out in that way. Do you consider the catalysts when you're selling covered calls?
I consider them, but I think every single time I've put too much stock in the timing of that catalyst, it hasn't made me any money. So, like the QQQ inclusion, it was like, "Oh, okay." Was it right around Thanksgiving or something? I think was the inclusion date, and it was kind of like, "Okay, we're in." Is the price going to go up forever? We're going to get the gamma squeeze that we've all been waiting for, and it was kind of like, "Wah wah wah." Because I think the market had already kind of figured out that they were going to get in. And so it was most of that was already priced in. I can't We might have gotten a little bit of a bump over that next week or 2, but then it just went down, right? And then it was like, "Wait a minute, QQQ was supposed to be amazing," um, but I think the market is so smart, it figures this stuff out. So trying to time those catalysts may not work out. Um, just today I was talking about I kinda didn't wanna sell too many covered calls into this potential blackout period before earnings, because if they're not able to go out there and sell at the market, then maybe we'll get a bump before earnings. Um, and you also have to be worried about any binary event. So these catalysts, if they do have a date on them, they would be considered a binary event. Earnings is a binary event. For pharmaceutical stocks, like FDA approval, if you know that's coming, that's a binary event. And if they get FDA approval, goes to the moon. If they don't, the stock goes to 0. Those types of things. Earnings can be somewhat similar, but MicroStrategy's earnings calls, I don't wanna say they've been disappointing, but the market really, you know, their EPS is usually negative, and it's kind of just like, yeah, the market just is not moved by MSTR's earnings. The interesting one, it could be the new FASB accounting rules. So I will not have a single covered call on over Q1 earnings. Now, the market could have it all priced in and the price could go down. It's there's no guarantee, but I'm so like superstitious about that one. It's nothing based on like I don't do technical analysis. I don't, do any of that stuff. So it's nothing based on more than just kind of FOMO. Like if we get a huge surprise, if the market has not figured out, um, and the other thing though that really is, I was gonna say if the market hasn't figured out that MicroStrategy's earnings report is about to go to the moon, but if Bitcoin is at 80,000 at the end of Q1, it ain't going to the moon because we're counting on 4 quarters of negative earnings being erased by Bitcoin. Bitcoin, the snapshot for Q1 was like what, 95? Somewhere between 90 and 100,000. Yeah, 93. So if it's up, then MSTR is good to go. But if if Bitcoin is down, but at the same time, that just means we have to wait to Q2 or Q3. So if you're loading up on long calls that expire the week after Q1 earnings, you might be disappointed. You might be a millionaire, but you might also be disappointed and lose all your money. Um, but those catalysts, I think, yeah, um, they're additive, right? Like individually, they may mean nothing, but all combined and over months and years and decades, yeah, the thesis is it's going up forever, Laura. It's just Bitcoin plus.
No, I 100% agree. Yeah, the catalysts, they all together equal something huge. And over time, like the QQQ is a perfect example. The price action was pretty stagnant and down with QQQ inclusion, but QQQ inclusion is massive. The rebalancing is going to be big. The constant buying as the assets under management of these funds continues to go up. We just don't see that because of all the other things happening as well. But it's there. It's still affecting the price. Totally.
And even the rebalancing, did you see when Dan and Matt UTXO talked about?
The share increasing, so the rebalancing affects companies that have share dilution even more because they don't go up in weight. Yeah, I've also made a video on that, but I included the link to Dan and Matt UTXOs because that was mind blowing to me too. I hadn't considered that.
Yeah, it's just extra frosting on top. It's like, yeah, it's gonna be crazy.
So yeah, to me, the FASB is what I hear from you is like uncertainty, right? Like you're uncertain of what's going to happen there, and options are that's like the whole game, right? Of options is like covering uncertainty, and that's why the premiums are so expensive on something like MicroStrategy because the implied volatility is high because people are uncertain of where this stock is going. Um, that has stopped me from selling covered calls because my stack of shares is so low that I would be selling covered calls on a big portion of my holdings. Um, so that kind of leads me a little bit into MSTY and also to poor man's covered calls, synthetic covered calls.
Well, before we jump onto that, let me address the part about worrying about your shares get called away by having a short stack, and kind of like what happened to me in my IRA. So, my solution to that problem was, and it's not a perfect solution. It's just it's the exercise that someone would want to go through if they want to sell covered calls and make sure that they never go below 100 shares. And the exercise that I went through was kind of like, imagine your best case scenario for MicroStrategy. In March, we had a 4x in about 5 weeks, I think. And I think we did something very similar in November. I think it was around 1 and a quarter, and then maybe a month and a half later, it was at didn't it hit 500? Did it bounce off 500 after hours or something maybe? Um, so it kind of did that again, not to say that that will or won't happen in the future, but it's a realistic thing to imagine happening because it actually has happened. So, in a particular week, if you think that MicroStrategy could go up 50% or 100%, then you would have to imagine how many uncovered shares you would have to be able to sell at that price in order to pay to prevent your original 100 shares from getting called away. And I kind of estimated that to be around like 50 uncovered shares for every 100. And but then with options, it lets you do that for a little bit cheaper of a price. So what I started doing in March, and I didn't know we were going to chop for 6 or 7 months, but what I kind of started doing then was instead of selling a covered call and buying shares with the premiums, I was selling covered calls and then buying leaps or buying um, the Junes and Julys with the premium.
June's of the next year.
Yeah, 2025. And kind of stacking those because, having 50 uncovered shares gives you 50 delta of upside exposure, unlimited, right? You can get all the profits from that. But with a July 1080 strike, you can get a ton more delta for the same price as the shares. It's super risky. However, it's instead of protecting the downside like a covered call, it's protecting your upside. And if I sell the 450 strike and it goes to 650, those June and July and December 2025 options will appreciate and allow me to participate in that upside more fully. So that's kind of the only strategy that I was able to come up with that let me imagine that I could sell, in air quotes, I could sell my covered calls safely, is because I had so much uncovered long exposure that it would cover my worst case. I say worst case scenario, but it's best case scenario that MicroStrategy just rallies and we get this Godzilla candle, right? That's what everybody's waiting for.
In that scenario, would you then, in that worst case of the price, going up and your strike getting hit, would you sell those leaps to cover the or like to get your shares back? Would that be the strat you would do?
Yeah, and it's exactly what I did this past week. So I was selling. The price went up all week long, right? So every single covered call that I sold went against me. On Friday, the price was like 300 or 315, something like that. So I sold like the 315 strikes. Well, Monday those were underwater. So I sold like the 325s or the 330s. And by the next day those were underwater. And then I sold like the 360 or 70s and those were underwater. And then I sold some 370s and I think those ended up finishing in the money as well. So it cost me about $50,000 in upside by collecting 10 to $20,000 in premium, right? So, do I either let shares get called away or I went and I looked at all of the long calls that I had purchased, right, over the past 6 months, and I had 20 of the April 2025. They were at the top of the chain at the time. So when I bought them months ago, 530 strike was the cheapest ones I could get. But now, of course, the 1080s are the cheapest we can get. So those 530s almost went in the money. And so I made like 5x returns on those calls. So I just sold. I needed to roll them anyway. They expired in April. So I don't like my long calls to go under 90 days because that's when they really start to decay faster. Um, so I needed to roll them anyway. And I owed I basically owed the exchanges 50 grand if I didn't want any of my shares to get called away. Well, I sold those long calls for 100,000, and then I used, when my strikes get breached like that, I use that as kind of like a sell signal because people have a hard time figuring out how to time the market. Buy low, sell high sounds easy, and it's simple, but it's not easy. Well, when I sell a covered call and my strikes are breached, well, then that's kind of like, I feel like that's the market slapping me upside the head saying, you should probably take profits now. And so I took, $100,000 worth of profits off the table, no leverage. I closed leverage because if the price goes down to 400, or excuse me, down to 300, those are not 5x returns anymore. They might only be 2x returns. So, um, that was kind of like a signal to me that the market was telling me, look, you have to take some profits to pay for these covered calls that you let go underwater. And that was kind of like the perfect time to take some leverage off the table as well. Um, so I rolled those calls to the next week and collected another, I don't know how much premium. Um, but yeah, that's kind of I like selling cash secured puts as a good way to get into a position. I like covered calls as a good way to get out of a position, but I also like covered calls as a way of kind of signaling me that, hey, you owe some money here. And if it's a good time to sell to open a covered call at high prices and high implied vol, it must also therefore be a good time to sell to close a long call that I had purchased that's in profit. Selling to open a covered call to me is the exact same thing fundamentally as selling to close a long call. You're selling a call. One's just opening, the other one's closing. They're both going to be very profitable if the price is up and if the and implied vol is high.
Yeah, it makes sense that they would be connected and correlated in that way. Yeah, and signal that's a good way of using a signal like that for sure. Another thing I've heard you talk about is IV spikes, selling covered calls into IV spikes. Can you explain that a little bit?
Yeah, so the IV chart that I usually look at is at marketchameleon.com, and you can get a free account if you just use your Gmail or something. Um, but if you go there, you can look at a ticker's 52-week implied vol as a chart, and it looks very similar to the price chart for MicroStrategy because when MicroStrategy rallies, implied vol also spikes. A lot of stocks that doesn't really happen. If you get a slow rally, most stocks implied vol doesn't really go up as the price goes up. But with MicroStrategy, you get a double benefit there. So it's always good to sell a covered call after a rally because you've already captured a bunch of the upside. So you don't have to worry about, you could still miss out on more upside, but at least you don't have to worry about missing out on the upside that you've already captured. But then you also get the double benefit of implied vol spiking, which causes the option premium to be uh, expanded. And implied vol is generally a mean reverting statistic. And if you look at Market Chameleon for any stock, you'll see that it kind of has a baseline and it'll track, like, okay, this particular stock goes, ranges between 40 and 50 vol. And I think MicroStrategy before March was around 60 to 80 vol, implied vol. And then, of course, we got the big spike in March. And even if you sell at the top of that spike and the price of MicroStrategy doesn't go down, you can still profit off that trade because as implied vol contracts, the option price will contract. So even if MicroStrategy's price holds steady, you can actually buy that contract back for less than you sold it because implied vol is contracting.
So you'd close that option. You wouldn't let it just run out.
You can, but Tasty Trades kind of like SOP, their standard operating procedures, what they recommend is to manage a trade as early as possible. So if you can collect, let's say 45 days to expiration, if you can collect 50% of the premium that you originally collected, right? If you sell it for 2 grand and you can buy it back for 1,000, if you can do that in 2 to 3 weeks, why would you hold it for another 3 to 4 weeks? Because you've already gotten over half of the profit in less than half of the time. And so if you do that, then you just have to make a decision. Um, At that point, it's okay, I'm closing this trade. Do I roll it out to 45 days again because the implied vol is still good? And I think or I think that implied vol will continue to contract. Or if I think that the price, may go down and find support, um, then you may want to roll it out to 45 days again and collect another 2 grand in premium and then hope to sell it back for 1,000 in another 2 to 3 weeks. And you kind of rinse and repeat that. Or if you think, okay, I profited off of this rally and now I'm just going to close these down and wait for the next one, you can absolutely do that as well. So you can decide to let the thing expire or manage it early. They recommend managing things early as possible.
And this is where you would benefit from being in a options market with high liquidity, so the bid and ask will be closer and things like that, right?
Absolutely. So that's one of the top two elements to any options trade. You could argue that position size is the most important, right? So on a $100,000 account, if one trade is half of your money, that's a position size that's way too big. That's a bit hypocritical for me considering MSTR is 100% of my portfolio, my options portfolio. But yeah, I guess it's a do as I say, not as I do type of thing, and not financial advice, of course. But I don't mind urging caution, right? Position size, it's like live to fight another day is the motto, right? If no single trade can kill you, then you should be able to, with the law of averages, make incremental gains every week and eventually, beat the house, I guess. Um, so position size is king, and then beyond that is liquidity because the only way that you can make money is to get into a trade and be able to exit the trade after you've made profits. If you are profitable on paper, but you can't find a way to exit the trade, then you have no money. If your long call is in the money, you can just exercise it. So that's kind of like a get out of jail free card if you're an option buyer. If there's no liquidity at all and it's in profit, you can just exercise the call. Um, Actually, European options, I don't think you can. Maybe they're all cash settled. So I'm not sure what you're dealing with in Canada.
We can exercise for the yeah, it's the same as the states.
Okay, cool. Yeah. So a lot of people don't realize that the buyer they understand that the buyer has the right but not the obligation um, to exercise those shares. But some people don't realize that you can do it before the expiration date. They can do it anytime they want. They can do it the very next day after they bought it, or the same day that they bought it if they wanted to. Um, 99% of the time, that would be a mistake because when you exercise early, you're waiving your rights to any of the extrinsic value that's in that option. So a lot of people have been exercising their contracts ahead of the 117 expiration date, and that all makes sense because it's very very close to the expiration date, and especially those deep in the money options had almost no extrinsic value left in them. So exercising all of those contracts made sense. But if you've got a month, 2 months, 3 months left on a call, exercising that contract almost never makes sense.
You're better off selling it if you wanted to take profits from it.
Exactly, just sell and keep the cash. Yep.
Yeah, so I wanted to get your thoughts on MSTY and and synthetic calls as well. You know, the poor man's covered call strat.
Yeah, so I initially the very first, video that I did on MSTY, I was a little bit down on them, and I'm down on anything that I have to pay a management fee for, period. So that's my bias. I always feel like, why would I pay someone else to do what I can do? Um, so my base assumption and it may be wrong, but my base assumption was that MSTY would underperform simply because you have to pay them the management fee. Uh, However, I didn't kind of give them credit for, I can't remember what all of the letters in DRIP stand for, but it's like dividend reinvestment something. And if you take all of the dividends that you're paid out with Misty and buy more shares of Misty, that 10% dividend or whatever a month that they were paying out goes from 120% returns a year to like a 3x return if you're reinvesting all of the profits. Now, if you're trying to retire and you can't reinvest all the profits, that's a whole completely different story. But once I realized that if I gave them full marks for what people usually do, which is reinvest all of the dividends, they were pretty close to capturing the same returns as an MSTR spot holder. So I'm not as down on Misty as I kind of was the very first time I reviewed their strategy, but I also think that they've changed. I stopped following their trades and I need to really start following again because somebody was saying that they've been setting up a bunch of credit spreads. And I was like, what? Which was a little bit different than what they were doing when I first followed them. It looked like they were doing very standard covered call strategies, and the synthetic um, calls that they were using might have something to do with. I think I saw something that I think Tim shared it, but it was, I think these ETFs are not actually allowed to hold 100% underlying. Like an MSTR ETF can't just go and buy 100% of MSTR shares. I think they can only have like 5% or maybe 25% or some. There's some kind of they're allowed to own some shares, but they can't just be like all in on shares. So maybe that's why. And please, anybody that's reading this and has me knows that I'm completely full of shit on this and wrong. Please correct me. But I think the only other reason why I could think of that they didn't own the shares to sell the covered calls against was maybe if they get some kind of beneficial margin treatment for owning the calls and option contracts. But my educated guess is that they can only hold a certain number of MSTR shares, and so in order to sell fully kind of insured covered calls, you can create a synthetic stock if you go out to whatever expiration date. And if you choose the same strike on the same expiration date and you both buy a call and sell a cash secured put, the deltas from each of those options adds up to about 1. So now you get the same delta exposure as owning 100 shares. Um, so that was what they were doing when I reviewed them however many months ago. And then they would sell covered calls. I can't remember if they were selling them at the money or out of the money. Um, 30 to 30 days or maybe 6 months out. I can't remember how far out they were going, but it wasn't necessarily the days to expiration that I would have chosen because I'm a tasty trade disciple. And if I'm selling out of the money covered calls, I'm going to go to 45 days to expiration. And if I'm selling at the money covered calls, I'm probably just going to go a week out. Um, Based on their research, that's kind of like the best um, theta acceleration curve that their research indicates is that for out of the money options, 45 days to expiration is optimal, rolling them every 2 to 3 weeks. Um, but for weeklies, I mean, all of the extrinsic value has to drain out of that account in 7 days, right? There's not a lot of time. So you can kind of just plow plow right into near at the money and get a bunch of premium. And then the theta acceleration curve has to just be very steep. Like all of the extrinsic value has to drain out in a week. So you can still build in out of the money value if you'd like. Um, but if I want to get greedy with the premium and sell at the money, I don't go out to 30 days or 45. I do at the money. Yeah. So back in May 2020, that's when I started selling options. I was doing the very kind of straight laced own shares, sell covered calls, sell cash secured puts, and not taking any any chances with leverage. And I can't remember if I was using margin at all, but I started seeing these poor man's covered calls strategies, and I'm like, holy crap! With the same amount of money, I can sell two covered calls because you can buy a leaps for, let's say, approximately half the price of 100 shares, and you can sell covered calls against those. So from May 2020 to what was it? Um, about a year and a half, I pretty much 3x'd my account, and I was pretty proud of myself. I'm like, "All right, I don't suck at this," like, but and I'm thinking, "Oh, this is easy. Like, how like, am I just getting lucky here?" Which I kind of thought I was because everyone was really making money, right? Like, after the COVID crash, as long as you didn't just exit the market, everybody made money after that, right? Because it just recovered. Um, but I looked at the SPY and I was like, "Well, I made more than the people who were just hodling the SPY." So I'm like, "All right, I must be doing something right." Well, I got a little bit overconfident, and instead of just selling the covered calls, I started selling these poor man's covered calls. And those leaps, while they're efficient, are much more risky if the price goes down. So if you own 100 shares and the price goes down 50%, okay, they went down 50%, but there's no expiration date on your shares. You can just bag hold and you can wait for the price to go up, or you can continue to sell covered calls at whatever the current price is. You've got complete flexibility there. But when I switched from a covered call strategy to a poor man's covered call strategy, and then they started to raise interest rates and the market went to hell, and I was selling poor man's covered calls in Tesla when Tesla was 400 a share, and I rode Tesla down to 100 a share. All of the profits that I made in a year and a half went right back to the casino in less than 6 months, and I was right back to square one. And I just, I kind of had to just dust myself off, and I was like, "Okay, I did not realize." Like, I knew it was leverage, but you don't understand leverage until you experience it. And so, I was mitigating my downside a little bit because I'm selling covered calls. But in a bear market, there's no amount of covered call selling that can save a long call. It's not possible. I mean, unless you were just like, if you were actually selling them like under the share price, like possibly, you know what I mean? Like when Tesla was 400 a share, if I was selling the 350s, like that's possible. Like maybe I could have kept up with it, but I absolutely destroyed all of my capital, um, and was right back where I started it, 2 years ago. And so I kinda recalibrated and I started doing that again. Um, and so I think right now, I think I have 2,000 shares of MicroStrategy and I'm selling 4 or 5 poor man's covered calls, right? So I could have 20 traditional covered calls on and about 5 poor man's covered calls. So even if MSTR shits the bed, and my poor man's covered calls are completely decimated, instead of it being like 75% of my portfolio, like it was back in 2022, it won't hurt me nearly as bad. But that goes back to position sizing again. That was a very painful position sizing lesson. Um, so yes, I love poor man's covered calls. It's a very effective use of capital if the price either goes sideways or up. If it goes down, it's a nightmare.
Did you also have a cash secured put at the same strike price, or the opposite of the covered call when you were doing that?
I can't remember how much cash secured put selling I was doing then, but again, the returns are the very similar for selling covered calls and cash secured puts. So I don't remember having much dry powder, and of course, as my account size is dwindling, I'm having less and less dry powder because I'm just holding on for dear life, and rolling those like I have the leaps, but then as those leaps go out of the money, now they're practically worthless. So now I'm like rolling them down. and then those are and then those are just withering away too, and it was just like it happened, it happened over 3 to 6 months, but it seemed like it happened overnight, and I learned a very harsh and, valuable lesson, though, with that. I almost feel sorry for people who make money with their first trade because they think everything is easy, right? You could probably if you lose $10,000 on your first trade, that'll probably make you $1,000,000 over the next 20 years, just getting burned and realizing that, losing money happens.
Yeah, for sure. I also wanted to ask you a little bit about how you got involved with True North. How did that come about?
Yeah, I I was kind of surprised myself, like, I felt like I was a little bit of an imposter syndrome because I'm like, I mean, yeah, I made a bunch of videos, but when they tell me that I'm gonna be in a room with frickin' all these quants and they're talking about convertible bonds and like the first time I heard MNAV, I had to Google it. Like like, what are you talking about? And they got all these valuation models and they're like, if Bitcoin is this and MNAV is that, and here's my calculation on the spreadsheet, and this is what MSTR. And I'm like, are you sure you want me in here talking about this? Um, but and it was actually I actually literally felt a little bit of panic when they told me that I was gonna be, I might have to be in some of these calls with like Josh Mandel. I'm like, dude, I've seen his videos and I've seen him talking about gamma and delta and like real time just in these trades. And I'm like, I'm gonna be exposed. Like I don't like this is scary. Um but I think it's kind of proof of work, which um, is very, Bitcoin forward. My goal going into 2024 was I was like, you know what? I'm kind of scared, like doing public speaking, and um, I was always decent, like training the new people that would come into a department. That's kind of one on one, but standing up in front of a room of people or doing things like this is very kind of scary for me. So I was like, you know what? If I just do a video a day, maybe I'll get comfortable on camera, right? And so by the time they put True North together, I must have had 150 or 200 videos at that point and had put together a decent body of work. Um, and I guess that was enough to be noticed and like, hey, if you've got this much to talk about and I wasn't like losing money the whole time, like maybe this guy's not completely full of shit. So um I guess that's what got me noticed, and I was a native option seller. Uh, Josh will trade both sides, like, adeptly, and he can just do it. I don't know if he stares at his computer all freaking day, um, but, he can just be in that heat of the moment, whereas I'm kind of more like, "Yeah, my stuff expires next week," or, "My stuff expires next month." I'm not too pressed that I have to stare at the screen all day, um, but yeah, I mean, I guess that kinda was my niche, was the option selling, part, and, yeah, I think that's what got me noticed, but it definitely wasn't my convertible bond expertise.
Well, that's what's so great I think about that podcast is that each person really brings something different to the table, and yeah, yeah, you often get what I see is you often get called upon with the talking about the covered calls and things like that, right? So
And it's funny because when I got connected with those guys, they almost made me abandon my entire strategy. I was so bullish, I'm like, "I'm never selling a covered call again, like, screw this. Selling covered calls sucks." Um, but yeah, I think, and then you're reminded of what the market can do, right? So we got that pump in March and it's like, yeah, never sell a covered call. And then we got 6 or 7 months of chop, just sideways, and then it's like everybody's depressed and it's like, where's the moon? We were promised the moon, like, where is it? Uh, so it kind of, is a little bit of a reminder that while we know where it's going, we're not promised when it's going there. And and if you hang your hopes on a particular expiration date, you may be sorely disappointed.
Yeah, and I see that a lot, being chatting with people in this space. It's with the November run up, everyone thought, okay, this is it. We're going up forever. And then it goes sideways and down and people are like losing their shirts. And it just you never know what all these people's positions are, but I think a lot of them are holding MSTX, MSTU. They're over leveraged. They have no idea of, like, leverage is great when it goes for you, but when it goes against you, like you mentioned before with your poor man covered call with Tesla, it's like it goes against you fast and hard.
It sure did. Yeah, and then talking about those leveraged, tickers, so there's a guy, and bless his heart, but he doesn't even believe in Bitcoin. Like, he thinks Bitcoin is a scam, dude. Like, no bullshit. He's pissed off because Satoshi didn't just distribute the 21 million coins to everyone on the planet when it came out. He should have just given everybody what is 8 billion divided by 21 million? Is like 0.06 or something, whatever the hell that number is.
Yeah. 0.002.
Like, everyone should have just gotten 0.002 Bitcoin. That would be fair. I'm like, are you out of your freaking mind? Like, if you're in the middle of, uh, mosquito country and you have malaria, you know what the first thing you're gonna do with 0.002 Bitcoin is, no matter what the price? You're gonna sell it for freaking malaria drugs, and then you're gonna cure your malaria, and then you're not gonna have any Bitcoin left. So, all of the rich people would still end up with all the Bitcoin, dude. That doesn't make any sense. But the point of even telling that story is, like, we follow each other, so now he's like, "Oh, you're making all this money with MicroStrategy. Oh, man, I'm gonna, I wanna do the trade too." So, he, like, FOMOs in probably around November, and now he's down. And he's like, "Oh," and I see him post, and he's like, "Oh, man, I can't wait to just break even and exit this trade," right? Because that's the how you feel about it, right? Well, I'm like, "Dude, you can't even you don't even believe in Bitcoin, which is what MicroStrategy owns. How can you have emotional, fortitude with this trade if you don't understand and believe in what it's based upon?" A month later, he's in MSTX. I'm like, "Dude, a month ago, you were telling me you couldn't wait to exit MSTR, and now you bought MSTX and you're selling covered calls against it." I'm like, you yeah, there's so much FOMO that people that don't even believe in the underlying asset, just they can't help themselves but get into these trades. And I don't even remember why the hell we started talking about it, but it's crazy to see people who don't understand Bitcoin and don't understand the trade, but just FOMO into it and are ready to just paper hands the damn thing as soon as it goes the other way.
Yeah, for sure. Yeah, I mean, MicroStrategy is that people have mentioned this before, but it's that interesting place between you have to understand Bitcoin, you have to understand capital markets and financial instruments and all these different things, and it's very few people will take the time to do that. Or like, yeah, it's just crazy. So many people don't understand Bitcoin alone, and then they're buying MicroStrategy, and maybe, I mean, my hope is like MicroStrategy might be a little bit of a gateway to some people because it's TradFi that they can learn about Bitcoin and understand how valuable Bitcoin is. That's kind of my hope. But I want to go back. You mentioned the business intelligence software company that MicroStrategy has. What about that is interesting to you?
Yeah, so we've got the bear sightings, segment on True North, right? And I swear to God, they're gonna put my face on the poster one of these days, because I keep saying, like, I wanna discuss the bear case. I wanna discuss the realistic bear case, because most of the bears are morons. Like, their bear cases are like, "What if Bitcoin goes to 0?" Or, something like that. I mean, I guess it's not a non-zero chance, but, like, it's a rounding error as far as I'm concerned, and I kinda feel like, um I kinda feel like we need to construct the reasonable bear cases. Um, so, at some point, we may have time to go over it, but, I kinda feel like, Saylor said when his what was his the 10 things that you would tell a young person, and I think number 10 was upgrade the world. And so I think because what Bitcoin is actually doing um, is imposing the free market on the entire world, and that has never happened before. So the world, we don't even know what a world that exists in a free market looks like. The beginning of the founding of the United States was kind of close. That was as close to the free market as we've probably ever had in human history, and the country flourished at that time. But a true free market is kind of a novel idea, and I believe it's kind of inevitable. And so what a free market is going to do is expose every single company on the planet. You're not going to be able to game your stock price by doing share buybacks, but having a shitty product. Was it Yeah, Punter Jeff was tracking, I think he still tracks it, where MSTR is in the S&P 500 companies, right? And we'll pass like Sherwin-Williams or frickin', I don't know, Chipotle and all these, but actually companies that you've ever never even heard of. I'm like, who the hell is this? But they're like number 217 in the S&P. Well, that's not gonna cut it anymore. And you have to have a product or a service that upgrades the world. People will part with their money, and in the future, when the only money is Bitcoin, you're going to have something that is so compelling that people will actually pay you with their Bitcoin. So that's why I think, even though a lot of people are like, you should just sell the business intelligence software and just own Bitcoin. I'm like, no, that's a recipe for disaster, because your company can't just be owning an asset. You have to upgrade the world. You have to do something. You have to provide someone with a product or a service. So for me, they can pivot off of BI and produce something else, but you have to provide the market with something that people are willing to pay for. Or to me, that would be like, um, if you any it doesn't matter what you're arguing about, but if you're an open-minded person, then you should be able to identify your falsification criteria, right? If you believe A, someone's trying to convince you of B. If you're open-minded, you should be able to say, "You know what? If you provide me with evidence of, XYZ, then I will change my position from A to B." So for me, I'm bullish on MSTR until someone can demonstrate that their BI software is a failure, or they can't pivot from BI software to something. Like, I don't know um, what they would pivot to, but Saylor himself has had an excellent track record. He tells the story about how what they created um, they couldn't afford the Excel or something, and they're like, "Okay, we're just gonna build it ourselves." And they're like, "Well, everybody else is using this other product. Like, you're never gonna survive." He's like, "Well, I can't afford to wait for this other product, so I have to do it myself. So it's either this works or we die, right?" And he just keeps doing that over and over. He just keeps reinventing the company. So I'm pretty bullish that someone with that kind of track record, and then owning the most valuable asset in human history, the company will be fine. Like, 99% sure of that. However, my official bear case is if they can't field a product that people want to purchase, then yeah, they wither and die, as they should, because Bitcoin is imposing the free market on the world, and in a free market, you either provide value or you die. It's that simple. So people overlook the BI component, and I think it's the most important part of the company.
Yeah, it's really interesting. Yeah. I think they'll be able to pivot it. I mean, they own so much Bitcoin. Bitcoin is becoming more mainstream, talked about. Like, yeah, Punter Jeff always talks about, it's pristine capital. I, I think it's kind of a no-brainer, and I think right now, my opinion of MicroStrategy is that they are just in the accumulation growth phase of let's acquire as much Bitcoin as possible. We have this other side of our business that is the business intelligence software. We'll keep running it as normal, and here we'll just acquire as much Bitcoin, and then we'll meld these things together or create something else, and um, that's further down the line. I don't even think they really care about that right now. I think uh, they'll figure that out later, kind of thing.
Yeah, and it's kinda like what you said, where they're gonna run the business intelligence software as usual, but it's even better than that because, um, what's the statistic? I can't remember, like, everybody who graduates that can work for Tesla wants to work for Tesla. Like, anybody with software engineering, well, they're attracting all of the best talent. Well, pretty soon, MicroStrategy is not really competing with Tesla, but they're competing with Microsoft, and they're competing with all of these other companies for the best business intelligence software type of people, and they're gonna get the best talent, which means they're going to be able to, if the bear case is that they can't come up with a compelling product, well, when you have the best talent and you're recruiting the best talent, you're going to come up with the best ideas. So I'm completely, I don't wanna sound like a bear, like, uh I'm completely bullish on the stock. I think that they will attract all the best talent, and I think they will have all of the best ideas. And eh, I don't really do predictions on what MicroStrategy's price target will be or Bitcoins. I mean, I'll do it for fun, maybe, but I don't even know how to do valuation models or any of that crap. So none of that stuff is serious for me. But I do have a prediction about how the Mag 7 will be ordered in about 10 years. And it won't be the Mag 7, it'll be the Mag 8 because MSTR will be in it, and I don't know if MSTR or Tesla will be 1 or 2, but whichever one is 1, the other one will be 2, um, and the rest will be in the order that they adopt Bitcoin as their treasury. So whoever's next, let's just say it's Facebook, because doesn't he have a dog named Bitcoin or
It's got two goats. One's named Bitcoin. One's named Max.
yeah, okay, it's goats. So, like, it could be Facebook. If Facebook adopts Bitcoin first, they're number 3. It's that freaking simple. And then if Microsoft comes in after them, they'll be number 4. But so we can bookmark this and let's give myself to the end of 2025 because that'll give me one more full bull market if the 4-year cycles continue, right? So that'll give me like one more full year to get MicroStrategy's market cap pumped to the absolute sky. Um, but yeah, so I know we're talking about MicroStrategy, but the reason I'm so bullish on Tesla is like full self-driving is going to make their EV sales look like a rounding error. And I'm basically just quoting Stephen Mark Ryan, which is where I get all my bull fuel for Tesla. Um, but and then Optimus is going to make full self-driving look like a rounding error, and it's going to be a completely different world when we have billions of robots just running around. I'm gonna have one to pick up my dog poop. You know what I'm saying? Like, I'm not doing it.
Yeah, fair enough. No, that's really interesting. I think we should begin wrapping up here. Soleil, it's been incredibly interesting getting your perspective on all of this stuff and insightful for myself as I'm going to be starting my own income fund off of MicroStrategy and MSTY. I'm going to do a combination of the two. Kind of an income growth fund is like how I would categorize it. So I'm going to take some of the knowledge that I've learned here and implement that in that strategy, I think.
I'm gonna do a challenge. I'm gonna fund an account. I have my IRA, right? And I do all the same strategies that I do in my regular account, but I'm just gonna go to cash and then I'm gonna buy all Misty in my IRA so I don't have to worry about any tax ramifications of dividends. And then I'm gonna fund I just asked Tasty Trade for a new account. I'm gonna fund it with the exact same dollar amount as my Misty, and I'm gonna try to outtrade them over the next year, 9 months to a year.
That'll be very entertaining and educational, I think. That'll be good insight to have for people, I think.
If I have to take an L, I'm just gonna delete my account. in like August or September, if I'm losing, I'm just there's no way I can face the music.
Yeah, for real. I wanted to just get before I let you go here. I want to just ask a combination of these two questions, kind of put together. What is your favorite thing about Bitcoin, and what do you see for the future of Bitcoin?
A lot of people will kind of say, "Oh, how do I orange pill people?" And they wanna go straight to the freedom, right? They wanna go straight to the freedom money and eliminate war and famine and disease and all of that stuff. But I think you have to go to people's center and go to the greed. Like, you it's just a part of the process. It has to be kinda like number go up first, and then once you watch 30 hours of Sailor videos and Jeff Booth and, all of these things, then it's almost like a bait and switch of, like, um, you go in it for the money and then you come out self-realized kinda thing. So, my favorite thing about Bitcoin is that it's a kind of like a bait and switch for self-actualization. Um, you think you just wanna get rich, and then you realize, "Oh, wait, this is probably the only way that the world is gonna be saved from destruction." Um, so that's kinda my favorite thing, and the second part was where do I see Bitcoin going? So, I guess this is kind of where Sailor and I start to part ways a little bit because I'm more in the Saifedean and Jeff Booth camp. Um, and I don't know if Sailor truly believes it. I think he does, but like, what was his quote where he said, with the war for money is gonna be won with money, like, with the people who have the money." And so he was kinda arguing for Bitcoin banks um, and that the US dollar's not going away and all of that kinda stuff. But and this is me trying to do my best to parrot, Jeff Booth's ideas, but if Bitcoin is imposing the free market on the world, it's kind of inevitable, and I'm hoping that fiat goes out with a whimper instead of a bang. Um, but that's where I see it going. I see, the whole world on a Bitcoin standard, and the way that Jeff Booth says is 8 billion people in service of 8 billion people, and I I'm just desperate to live long enough to see what the world looks like when that happens. So, um, hopefully we'll be revisiting this post in 50 years, and we can talk about how much the world has changed, but, um I kind of think that if Bitcoin can't save us from a nuclear holocaust, then there is no solution. Like, it's the only way that we can disincentivize war. Like, if you can't take over someone's country to steal their gold or steal their oil because you can't get their Bitcoin, like, maybe there's some hope for humanity. Um, so I'm that might have sounded pessimistic, but I'm actually very optimistic that Bitcoin kind of does really fix everything, and I'm super excited to see it happen.
I think that was really well put. I think, yeah, Bitcoin is hope, and Bitcoin, in my opinion, is inevitable. And I think you're right. I think it fixes a lot of things. Like a lot of terrible stuff has happened throughout history over resources, and Bitcoin changes that. Bitcoin is secure, safe money. Whereas, yeah, I don't know. I think it has profound effects as well. And the whole reason I started this channel was because of the profound effects that it had on me as an individual. Not the number go up. Like
Oh, really?
I went through that.
Oh, you had already been through that process.
I went through that. I'd learned, got into it because of money and whatever, and then learned like, oh, this is actually changing who I am. This is giving me a longer time preference. This is making me not feel nihilistic about the future. This is making me feel like there's a chance for my generation, right? Like I don't feel hopeless anymore. So I mean that's profound in my opinion. So that was the origin of this channel, and it's shifted a lot, but yeah, that's still in there for sure.
Cool. Couldn't agree more.
I appreciate your time today, Soleil. That was excellent. Your channel links will be in the description for anybody watching, and that's about it. Thanks so much, man.
Cool. Appreciate your time, man. Thanks for the invite.